So BlackRock's terrible. You know,
Right.
they're one of the worst players on Wall Street. They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs. You know, they own more, their ETFs own more stocks than there are stocks, right? They're just peddle there, and they charge a fee for that. And they have incredible political influence that they use to make it easier for them to game the system. And they are really a plague on capitalism. But they become a useful idiot in this case. The thing about Graham is that Bitcoin was really the first major financial play in history where the plebs got to it first. Usually it's the reverse. Wall Street makes their money and then they sell off bits and pieces, right? Companies go public and the insiders make tons of money, and then the public can buy shares in the aftermarket, and the feast has already happened, and they can buy shares. But here in this case, the feast happened by the pleb.
Most institutions are still buying futures because it's simpler and they can call their prime broker, and they will switch to the ETF. I think the ETF will have a dominant amount of liquidity in Bitcoin, and then we'll have an Ethereum one. And that'll make it so much easier for the institutional capital.
Yeah, BlackRock and all these other firms, Fidelity, will launch ETFs, and it'll bring in a tremendous amount of capital. And the product itself, the Bitcoin ETF, is an inferior product to owning Bitcoin outright, just like the gold ETF is an inferior product owning the gold outright, because in the gold ETF, if there's a credit problem with the custodian bank and they go bankrupt for some reason, it says in the fine print that they can settle with you, the ETF owner, in cash. So you don't get gold for your gold ETF. You get paper money, which is the thing you're trying to avoid. Same thing with a Bitcoin ETF. It'll have contingencies in the prospectus that make it very much inferior to simply buying Bitcoin and putting it into cold storage and taking it out of the system. But nevertheless, it will unleash a lot of capital. And, we're going to get to a valuation of Bitcoin, which would be similar to gold. So gold is in the 10 trillion approximately market capitalization, the global gold stock that's traded. And Bitcoin is just under 1 trillion. So you're going to get a 10x on Bitcoin pretty quickly here. So you're talking 400,000 to compete with gold. I think we could get it on this move. You're going to get it definitely above 250,000 on this wave, on this move. Will we get to 400,000 on this without a correction? And Bitcoin corrects pretty severely every few years. Possibly, we'll have to see how it develops. But I have a feeling that because the fiat money world is collapsing so rapidly, and the model of the nation state itself is collapsing, that we could be pretty shocked on the upside in terms of where Bitcoin is going.
12 to 24
in dollar terms, the price of Bitcoin would go higher, right? If the dollar is going down, your dollar price in Bitcoin goes up. So we very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually it too will go this way of all fiat money. So fiat money is, we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world, and gold will have a place in that world. And countries like we said, China, Russia, and others are aggressively buying gold. Central banks still settle in gold, and gold will still be around, and it'll still have a bid, and people will still buy it, and it'll still be a safe haven play. But as Paul Tudor Jones has said, all the dynamics that go in, the macroeconomic dynamics that go into analyzing and projecting where the prices of these things are going, he likes inflation hedges. He says, yeah, gold, of course, is a classic inflation hedge, but Bitcoin is the fastest horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin.
But so put it in perspective, I would argue that Bitcoin, which is $1 trillion asset after 14 years, might be the single greatest brand ever created. Right? We created Tesla's close and Apple's up there. We created in 14 years, $1 trillion brand that doesn't have a CEO, that's owned by no one, that's universally known. It's, it's marketing genius. And if you look at Apple from its 14th year to its 30th year, I wouldn't be surprised if Bitcoin takes a bigger trajectory. Things spread virally, but it doesn't happen overnight. Retail is surprisingly invested and continues to invest. We have one client, so we don't deal with retail direct, but we deal with the institutional clients that deal with them. And so all the platform companies, the PayPals, the Squares, those of the world who have these wallets that collect money, and we do some of the trading for some of those companies. And there's one alone that between what they do with us and their two other trading counterparties buys more Bitcoin every day than is mined. So the whole mining supply is swallowed up by one app in the US every day. That's the global mining supply. And so one of the reasons I think Bitcoin has a shot of parabolic is this. There are 8 billion people out there, a couple, 250 million people own Bitcoin or some piece of the Bitcoin. As that goes a little more viral, those small checks add up immensely. We are seeing institutions come in. We're seeing hedge funds buy with our trading desk for the first time in a long time, the last couple months. I talked to one of my friends who's got a big decentralized platform. He said he saw volume double and then double again in the last 2 months. And so that's more retail online. Most institutions are still buying futures because it's simpler and they can call their prime broker and they will switch to the ETF. I think the ETF will have a dominant amount of liquidity in Bitcoin, and then we'll have an Ethereum one. And that'll make it so much easier for the institutional capital to come in. And, it's interesting. The SEC, I think, will approve this in the next 10 days, 2 weeks. Jan 10th is kind of a cutoff date because of a lawsuit they had with Grayscale. It looks like there's not going to be in-kind distribution, which is not the best thing. It'll be more interesting from a trading perspective, but every other ETF seems to have in-kind. And so Gensler's still trying to gum up the works a little bit.